Okay, as I said earlier, we got to talk to Todd Schoenberger about all this because he's managing director at Land Cult Trading. He knows what he's talking about. Todd, I don't know. Call me a Sicilian skeptic. I don't believe any of this. Best September in 71 years. I mean, big thrill. 4 people were trading this whole time.
Yeah, you're right about that. And you know what happened 71 years ago in September? World War II started. So you can look at it that way, too.
Yeah, good
go
point.
figure, go figure. But you bring up an excellent point. Volumes aren't there. We actually we haven't had a positive net inflow into equity funds, positive week since the first week of May. So you're not having participation from the retail investor. The clues just aren't there for the retail investor as well as for the individual consumer. The macroeconomic views look somewhat okay. I mean, the ISM, the manufacturing number, came out above 50 today. That shows a little bit of expansion, but still, you have the household balance sheet that remains crippled. Housing is just abysmal right now, and it's only going to continue to get worse. And you start thinking of credit, I just don't see where the earnings are coming from. So I am a skeptic just like you.
Okay, but yet we're anticipating a pretty decent earnings season, aren't we? And I said it last quarter, and I'm sorry, I was wrong, but I said they can't do any more cost cutting. They can't suck any more blood from a stone. And sure enough, here we are again. That's, I think, what we're going to see again.
Well, you have Fortune 500 companies sitting on $1.8 trillion in cash right now. Financials alone are over $1 trillion. So there's a tremendous amount of cash on the balance sheet for these companies. But there's a couple of things here to keep in mind. When you start looking at the merger and acquisition activity that we've seen over the last 6 weeks, you have to ask yourself, are companies actually buying to maybe gain a competitive edge or maybe looking for an increase in market share, or are they actually looking for cash flow opportunities? I mean, AOL is a great example. They just closed on 3 deals the other day, and I'm looking at these deals and I'm thinking to myself, well, it's actually going to really help their balance sheet and their future revenues down the line. So in this deflationary environment that we have right now, you have to wonder, are companies or board of directors saying, look, you know what, we have to keep the analysts happy, let's look for other cash flow opportunities and buy up a few of these companies since they're severely discounted?
But yes, and on that one hand, I do understand. On the other hand, are we doing it just to do something because we're bored and we need to spend our money, to your point, because the analysts are begging them? I mean, right, they wrote Microsoft letters saying spend your cash. Meanwhile, though, M&A activity, that means more job layoffs. So that's not helping the job market at all.
And that's the funny thing about it. That's the twisted irony. I mean, once you start thinking about some of these M&A deals and these acquisitions, yeah, that's exactly it. Because what's going to happen? You have somebody, if you have one ABC company takes over XYZ company, they both have the same personnel, of course, it's going to mean job elimination. And we've actually seen a little bit of that already. You still could continue to see first-time jobless claims to over 450,000. Here we had a number that came in below expectations yesterday, and everybody's uncorking champagne. I just didn't understand where that was coming from. But you still have an unemployment rate that continues to go up. People are out of work. We saw some decent personal income and spending numbers right now. But yet again, the skeptic in me is thinking, well, it's all of the people that are defaulting on their mortgages and haven't gone through the full repossession process. They're living for free. So they're supporting retail numbers. So I don't know. I need to see some real evidence right now. I need to see job growth. I need to obviously see some substantial, some type of a bottom in housing. And therefore, then I would probably turn a little bit more bullish, but I just don't know where the earnings are going to come from down the road.
That's interesting, the foreclosure money, that people are just not paying their mortgages and they got extra cash and they can go shopping. All right, so...
Well, Tracy, think of it this way. The average time frame right now in this country that people are living for free is 15 months. So people that have defaulted on their mortgage but haven't been fully repossessed is 15 months right now. Think about that. Why do you think retail sales have actually been standing on their legs?
Do you know how frustrating that is to someone who is every month trying to make that mortgage payment, yours truly included, right? I mean, that's killer. And I'm not buying anything because I'm trying to stand up to the contract I signed, almost a year ago now, or no, 6 months ago. Okay, let's talk about, though, what it's going to take for you. All right, because everyone's looking to this November 2nd election, and, they think that the angels and the sun's going to come out, and, the horns and all that, and then we're off to the races. I'm not sure I buy that either. What's it going to take to turn this market on a little bit and make it a solid move up, as opposed to, I mentioned earlier, a trader on the floor said to me, there's air under the stairs, so be careful when you climb up.
Yeah, that's a good point. And you know what, I completely agree with you, Tracy. I mean, after the elections, I'm not exactly sure we're going to have the quick fix. It's going to take some time to really build up the sentiment, build up the confidence for investors as well as the average consumer. I mean, a couple of things here. One, when we start talking about the Bush tax cuts and extending them, I'm not so sure that that's even going to improve anything, because remember, credit and issue to credit, and we had the $30 billion small business bill just signed, that is really not the issue at this point. It's really poor sales. You know, we had a gentleman on the other day who was at that backyard cookout in Des Moines, Iowa, and he was on Cheryl's show, and we were asking him, look, if you were going to hire X amount of people in 2011, if we extended the Bush tax cuts, or you had them extended, would you hire more people? And he came right out and said no, because of the poor economic environment right now. So I'm not exactly sure we're going to see everything be all great and it's, you know, we're all cheering, even though there probably will be a reposition of power on November 2nd. But ultimately, though, going into 2011, there has to be some type of leadership up at the top that's actually going to tell us, look, you know what, we're going to have confidence, we're going to have business, we're going to improve trade, we're going to get tough on China, and then we can start thinking, okay, look, now we might be seeing people back to work, getting back into the labor force, spending money.